All right, let's dive right in. We're talking about a powerful, really powerful tool that savvy real estate investors use to get a major leg up. And that tool, it's the hard money loan. Okay, so let me ask you this. Have you ever lost out on a killer property deal just because your financing was moving at a snail's pace? You find that perfect house, but by the time the bank finally gets its act together, poof, the deal's gone. I bet that sounds familiar to a few of you. It's got to be one of the biggest frustrations for investors out there. And that's the thing, right? In today's real estate market, speed is everything. It absolutely wins. Opportunities don't just hang around waiting for you. The investor who can jump on a deal the fastest, they're the ones who walk away with the price. So the big question is, how do you get that speed? Well, that brings us straight to the solution we're talking about today, hard money. Think of it as a type of financing that's literally built for speed and flexibility. And believe me, it operates in a totally different universe than your traditional bank. So here's the core idea, and it's super simple. A hard money loan is all about the value of the property, the hard asset, right? That's where the name comes from. The private lenders behind these loans, they care way more about the quality of the deal itself than they do about your FICO score or your credit history. Okay, so let's break it down. There are a few key features you've got to know. First, the loan is backed by the property's value. Second, it's funded by private individuals or companies, not big banks. Third, it's short-term. We're talking months, not decades. And fourth, and this is the real game changer, the approval process is insanely fast. Now, hold on. This isn't the kind of loan you use to buy your dream home to live in for 30 years. No way. Think of it more like a scalpel, not a sledgehammer. It's a specialized tool for very specific situations where its speed and flexibility can really, really shine. So where does it shine? Well, think about those fix and flip projects you see everywhere. You need to get in, renovate, and get out quick. Perfect for hard money. Or maybe you need some bridge financing to cover the gap between buying a new property and selling your old one. And what about property auctions? Where you have to show up with cash ready to go on a super tight deadline? Hard money is an absolute lifesaver in those situations. This quote from an investor really just hits the nail on the head. In crazy competitive markets like Las Vegas or Miami, where a good property gets a dozen offers in a weekend, having access to that fast cash, it's not just a nice to have. It's literally the difference between winning that deal or going home empty-handed. Okay, so at this point, you might be thinking, all right, this sounds kind of complicated. But honestly, the process is way, way more streamlined than trying to get a loan from a big bank. Let's just walk through how it actually works. It really boils down to 5 simple steps. 1, find a lender. 2, give them the property details so they can check it out. 3, you agree on the terms and the collateral. 4, you get your money, often in a week or less. And 5, and this is maybe the most important part, you execute your exit strategy. You got to have a rock-solid plan for how you're going to pay back that loan, whether it's selling the property or refinancing it. All right, so let's put these two head-to-head, hard money versus the big banks. When it comes right down to it, there's one core trade-off you need to understand, and that trade-off is speed versus cost. And when I say the difference in speed is dramatic, I am not kidding. We're talking about getting funding in just a few days with hard money. A few days? Compare that to a bank, where you could be twiddling your thumbs for 30, maybe even 60 days. In a fast-moving market, 60 days is an eternity. That's not just a delay, that's the difference between you getting the keys and watching another investor celebrate. So let's really look at these trade-offs side by side. On the hard money side, you get that lightning-fast approval based on the property's value. But the catch is, it's a shorter-term loan and you're going to pay higher interest rates. Banks, they're the total opposite. They're slow, they dig into every detail of your personal credit and income. But if you can wait, you're rewarded with lower rates and loan terms that last for decades. It's all about what you need for that specific deal. I think a lending consultant really summed it up perfectly. Nobody uses a hard money loan to get the lowest interest rate. That's not the point. You use it to grab an opportunity, a golden opportunity, that would have slipped right through your fingers otherwise. Okay, so we've covered a lot, but how do you actually decide if this is the right move for your next project? Well, let's make it easy. I've got a quick checklist for you to run through. Just ask yourself these 5 questions. Seriously, be honest. Do you absolutely need fast approval to lock this deal down? Is it a short-term thing, like a flip? Do you have a crystal clear exit strategy to pay back the loan? Are you genuinely okay with paying higher rates to get cash in hand super fast? And finally, have you actually looked into reliable lenders? If you're nodding your head and saying yes to most of these, especially the ones about speed and your exit plan, then yeah, a hard money loan might just be a perfect fit for your strategy. And so it all comes down to this one big question that every single investor has to answer for themselves. For your next investment, in a market where timing is literally everything, is that speed, that opportunity, worth the price? Your answer to that question could be the very thing that defines your next big win.